Hello there, good morning, and a very warm welcome to our webinar today. This is Get Your Payroll Done, and we're going to be focusing on your month-end tasks. Now, this session follows on from our Process Payroll webinar, which we ran earlier this month, and you can catch up with a recording of that session if you missed it from our website. My name's Duncan. I'll be hosting and presenting the webinar, and I am joined this morning by my colleagues Alice and Natalie, who are both standing by in the background, ready and waiting to answer your questions. Let's now take a look at what we'll cover in today's webinar. So we're going to start by working through your month-end checklist, which will involve producing the P32 report and, where required, submitting an employer payment summary, or EPS, to HMRC. So we'll have a look at what that report contains, and we'll explain when and how to send an EPS where required. We're then going to take a look at reconciling reports. So we're going to be suggesting some reports that you can compare to ensure that your payroll records are accurate and correct, and also how to see a breakdown of your P32 figures. We're going to finish with a section on employment allowance, running through the eligibility, which has changed for this new tax year, and the steps to claim employment allowance, as well as the process of claiming that each month by reducing your liability on your P32. And we'll finish up with some further support, telling you about more webinars coming up, how to access our help centre, and some of the e-learning available on Sage University. So let's get things started with the P32 and employer payment summary. And these make up the main elements of our month-end checklist. These are the tasks that you would complete once you've finished your payroll and updated records for all pay dates within the relevant tax month. So the 3 steps are to run your P32 report, which break down your liability and what you need to pay to HMRC. Submit an employer payment summary, EPS if applicable. And we're going to explain when you need to do that. And then last but not least, ensure that you make your payment of tax and NI to HMRC by the payment deadline, which is the 19th of the month if you pay by cheque, or the 22nd of the month if you pay electronically. Now, when I'm talking about month end in the world of payroll, we are referring to tax months, which begin on the 6th day of the calendar month and therefore end on the 5th day of the following calendar month. Now, if you're running a monthly payroll, it's pretty clear when you've completed all your pay dates within the tax period, because once you've run that monthly payroll, that's your one and only pay date within the tax month. But if you run a weekly, fortnightly, or 4-weekly payroll, you do need to be careful and make sure that you have completed all pay dates that fall within the tax month before you go ahead and run these tasks. So, for example, today we're going to be working in tax month 4. That's the July tax month that started on the 6th of July and will end on the 5th of August. Now, if I've got weekly paid employees and they're paid each Friday, I need to ensure that I've completed all my pay dates in month 4. And if you take a look at this tax calendar here, that would be the 11th, 18th and 25th of July, as well as the 1st of August, which falls into the current tax month, but obviously the following calendar month. So just something to watch out for if you are on a weekly based pay frequency. Now, if you'd like a copy of our handy tax calendar, you can download it from our help centre, and that gives you an easy way of checking what pay dates appear in which tax month. So just follow the link there on the slide, and that will take you off to our help centre. So before we demonstrate the steps, I want to go in a bit more detail as to what you'll find on a P32 report. So here's an example of a P32, and there are now 23 items that you can see on this report. Starting from the top, the first 4 items show you the total PAYE income tax deducted from employees within the tax month, the total student or postgraduate loans that have been deducted, and then the net income tax being the total of those 2, and the gross national insurance being the total employee and employer NI contributions. Now, all of that information is submitted to HMRC as part of your full payment submission that you'll do each and every time you pay your employees. And that makes up the bulk of your liability to HMRC. Now, other items on the P32 relate to adjustments to that liability. So looking further down, item number 5 is any employment allowance that you're claiming in this month. So we're going to talk more about employment allowance towards the end of the webinar, but if you've claimed employment allowance, you'll see that being deducted until you reach the annual limit for the employment allowance. And then under the employment allowance, you'll see any statutory parental payments that you are eligible to reclaim. Now, just a quick note, statutory sick pay cannot be reclaimed from HMRC. That's fully funded by employers. But any statutory parental payments, so the likes of maternity, paternity, and adoption pay, can be reclaimed at either 92% if you're a standard employer, or you get 108.5% of the amount back if you qualify for small employers relief. So that will be shown on the P32, and if you've selected the small employer relief setting, you'll also see the NI compensation value. The other potential adjustment to your liability is the payment of any apprenticeship levy that you need to pay over. Now, this would only apply to larger payrolls that have a pay bill of more than £3 million per year. And again, that is calculated automatically on the P32. So nothing on this particular example. And once all of that is taken into account, that leaves you with the amount to pay. Now, the tax, the national insurance and student loans has been reported in the FPS. The other items do require an EPS to be sent. In the case of employment allowance, one EPS is sent when you claim it at the start of a tax year, usually, and that covers you for the rest of that tax year. So that one's only sent once a year. But for the items that you've reclaimed or apprenticeship levy that you need to pay, these are reported at the end of each month as part of an employer payment submission. So those are the items that you would see on an EPS. So an EPS would only be required if any of the following points apply. So you're recovering statutory payments, you've suffered CIS deductions, you're reporting apprenticeship levy, or if you haven't paid anyone, you need to inform HMRC that no payment is due. So if that doesn't apply to you, everything HMRC needs has already been sent in the FPS, so you wouldn't have to send an EPS at the end of the month. But as you'll see in our demo, if you are recovering a statutory payment, that's the most common reason to send this, the EPS is required to submit the values that you've recovered for the tax year. So let's now dive into a demo of those two steps. So just bringing the slides down there. Now, first thing I'm going to do is check that I have completed all of my pay runs for tax month 4. So remember that started on the 5th of July and started on the 6th of July and ends on the 5th of August. Now, in this demo, I do have a weekly and a monthly payroll. So checking my monthlies first. If I check the last updated and last FPS date column, both of these columns show the 31st of July, which was my monthly pay date for this period. So that confirms that I've updated records and I've sent my FPS for my monthly paid employees. And then looking at my weekly paid employees, we can see here that the last updated and last FPS date is showing the 1st of August. Now, 1st of August still falls into tax month 4. The next pay date would be the 8th of August, which is in the next tax month. So that confirms that I have completed my final weekly pay date in the current tax month. So always worth running a check on the last updated and last FPS date column before you produce your P32. So we're going to run that report now, and you can find the report in a few different places. So one place you can find a P32 is within the reports area, just above the employee list. I've added it to my favorites, Form P32 Employer Payment Record, but it's actually found in the period end folder here on the left-hand side. And it's this one just here, Form P32. Other places you could run it from include the tasks menu. You've got tasks, period end, and P32 report. Or if you're on your payroll tasks, just take a look in this links section and you've got a direct link to the P32 report from here. So I'm going to click on that link to run the report. It's going to generate a preview for me, and it will ask me to confirm the criteria values, which is where you enter the tax month the report relates to. Now for me, it's the July tax month, which is tax month 4. So we've already got that entered in the 2 boxes between 4 and 4. And if I then click OK, that's going to bring my P32 report up on screen. And if I just zoom into that for you, you can see it starts on the 6th of July, ends on the 5th of August. And we can start to see our totals for PAYE income tax and student and postgraduate loans. We have our gross national insurance, that's the employee and employer NI. And then we do have some items that reduce our liability. So I'm claiming employment allowance, and I've still got some of that to claim this month. I'm also reclaiming some statutory maternity pay. And as a small employer, I'm claiming back 108.5% of the amount I paid out. So those values are appearing here. Don't have any of the other statutory payments this period, but you can see that that has kind of created a deduction to our national insurance. So the net national insurance happens to be a negative value. There's no apprenticeship levy for this company. So we're quite a small payroll. And then at the bottom of the screen here, we've got our total amount due. So this is the amount that we need to pay to HMRC after taking into account what we've been able to deduct. Now the section at the bottom just shows you the total SMP that was paid and the small employers NI percentage. So it's 100% of this amount plus 8.5% that I've been able to reclaim this period. So if you want to keep a record of this report, you can print it or perhaps export it and save it as a PDF. And each time you run a P32, if you then check in your company settings, you'll find there's an HMRC payments tab here at the top. And then from here, it's going to give you some of the key values. So it's my employer NI and the amount of employment allowance I've claimed. And here on the right-hand side, the total amount due. So that's recorded automatically at the point I run a P32. Now, while I'm in the company settings, I just want to show you the small employers relief setting. That's found on the details tab. So this relates to statutory parental payments when you come to reclaim them. And you'll see that I have ticked the box to say that I'm eligible for small employers relief. And you would usually be eligible if your total Class 1 national insurance contributions, that's employer and employee NI, was £45,000 or less in the tax year prior to the qualifying or matching week. So we cover this in our statutory parental pay webinars. And I've already checked this setting and that has been selected in this example. So that was my P32. And because I've reclaimed a statutory payment, what I also need to do as part of my month-end process is to submit an employer payment summary or an EPS. So you can find this from a couple of different places. If you go to the e-submissions tasks, there is an option to send an employer payment summary from here. And that will take you into a wizard where you provide the relevant details. Alternatively, if you're on your payroll tasks, within this link section, you also have a link to the employer payment summary here. So I'm going to click on that now. And in the wizard, it's going to first ask me the reason why I need to send one. And the most common reason is that you're adjusting your payment to HMRC because you've recovered statutory payments, suffered CIS deductions, or you're reporting apprenticeship levy. Now, the other reason for sending an EPS is that you haven't paid any employees. So you need to inform HMRC that no payment is due. You can either do that for the current tax month, or you can inform them for previous months or future months if you know for sure that you won't have employees during those periods. But our reason in this case is recovering statutory payments. You'd click onto next, and it will then confirm the tax month the submission's for. So this is tax month 4. And when I click onto next again, it shows the totals of the statutory payments you've recovered for the tax year to date. So this isn't the same number I saw on the P32 because this is a cumulative value that you're seeing on screen. And this is what I've recovered since the start of the tax year. So I've been paying SMP since my employee went on maternity leave. I've got the amount recovered, and as a small employer, I've got that NIC compensation. Then going to click onto next, where it's going to ask me about CIS deduction suffered. So this is a manual entry box. If you're in the CIS scheme and you've suffered CIS deductions that you can offset against your PAYE liability, you can type the amount you've suffered year to date in here. So it doesn't apply to me. And then this step shows you the calculated apprenticeship levy. Now you do get an allowance, which means if your pay bill over the year is going to be less than £3 million, you won't need to pay apprenticeship levy. And as you can see in this case, we have no apprenticeship levy due. And then I can just complete the wizard by clicking on to finish. You can ignore that box. It's just I'm in a training room. And then you've got your EPS submission, the employer payment summary, which will then send or report those adjustments to HMRC. So I'm going to click on to continue. I've got my usual gateway registration and company details. Click on to submit. So it shows me the tax year at the top there. It's just telling me that I'm still going to make a payment for this period. When I click on to submit, that sends the EPS to HMRC. So you do that at the end of the tax month. So even if you pay weekly, it's a monthly submission once you've completed all pay runs for that tax month. And if you ever need to check what values were submitted in your EPS, it's easy to find them. Just go to the eSubmissions tasks and into your eSubmissions log. And then scrolling to the bottom, you'll see this is my EPS. And if I view the details, it's my submission date and time. But then if you go into more details, this shows you the figures that were included in the submission. So HMRC now know that I'm reducing my payment because of the statutory pay I've recovered. And the final step in my checklist is to make that payment to HMRC using my usual payment method. So just to recap there on the EPS, it's required if you're reclaiming statutory pay, CIS deductions, or you're paying apprenticeship levy. Also used if you're informing HMRC that no payment is due. And this needs to be sent no later than the 19th day of the month in which the tax period ends, i.e. the following calendar month. So I've got until the 19th of August to send my EPS for the July tax month. So those are pretty straightforward steps, and hopefully you've been doing those throughout the year. But I also want to talk now a little more on a bit of reconciliation at the end of the month. Now, this is entirely optional. Since the introduction of RTI, the reconciliation that you used to do at the end of a tax year before sending your annual return is no longer a thing. But it might be good practice to reconcile your reports on a monthly basis, which gives you the opportunity to pick up on any potential mistakes that have been made and correct those if required without any undue delay. Now, I'm going to suggest a few reports that you could use for reconciliation, but we do have a support guide which lists a few more reports that you might choose to run. So main reasons for doing report reconciliation is checking that your pre-update reports that you've used when paying your employees match the information that was actually updated in payroll. So making sure nothing changed in between paying your employees and updating the records. And it also helps provide a breakdown of the totals on your P32. So reports I'm going to show you today are the payment summary, parts 1 and 2. Those are the pre-update reports that you would do each time you run a payroll. And we're going to compare that with the payment summary history reports. And we'll also link that back to the P32. So let's just jump back to the demo for this section. And first thing I'm going to do is show you how to run the payment summary history reports. Now, first of all, it is important that you include all employees that would have been paid during those pay periods. So before you run this report, have a quick check in your criteria settings, which you find above the employee list. And then from here, make sure you're not excluding anyone on hold, on holiday, or current year leavers. Should be fine to exclude historical leavers, as they won't have been paid in the current tax year. So have a check of the criteria. And also in this outline section, make sure you are selecting the all employees area rather than just monthly or weekly or a particular department. And to run the report, I'm going to select all of my employees. I'm going to click clear and then swap. I'm then going to go into the reports option above the employee list. And I've actually added the payment summary history reports to my favorites. And we're going to run them by date because that will then group the report by process date. And that should give you something that's easy to compare with the original payment summary reports. Now you'll find these two in the employee folder. So just to show you, if I select employee on the left and then scroll down, got your payment summary history, part 1 and part 2. So I'm going to start by running part 1. And when we run this report, we're going to run it for the dates of the tax period. So I'm going to include all employees and all payment periods. But in the processing date criteria, I'm going to enter 6th of July to the 5th of August. If you then click OK, that has then generated the report. So I'm just going to zoom in for you. And you'll see on this report, there's a section for each process date. So this is showing my weekly pay date, the 11th of July. And it's showing me kind of gross to net with the main deductions. And if we keep scrolling through, we can see we've got a section for my monthly pay run. So this is my total net pay for monthly. And we also have report totals here at the bottom. So I'd recommend saving these reports by exporting them. You can export them and save them as a PDF. And then you can compare this report directly with the payment summary part 1 that you ran at the time. Quick look at part 2. So again, I'd run it with the same criteria values, 6th of July to the 5th of August. This one shows much the same information as the pre-update report, but it has useful information on the tax code that was used at the time in the national insurance category. And then some further detail on some of the employer deductions as well, or employer contributions, such as the employer pension. So those are the recommended ones. And then it would be a case of comparing that with the pre-update reports just to make sure everything matches. So I'm going to show you some reports that I've already ran. So this one is the payment summary history part 1 by date. I'm going to take week 14. So this was one of my weekly pay runs as an example. First thing I'm going to check is the total net pay on the report, so £823.96. So this tab is the original payment summary report. So it has similar columns, working from gross to net. And then net pay is the same here, it's £823.96. So if your net pay total is matching, you can be pretty confident that everything else matches. Example of the monthly pay date. So 31st of July was my monthly process date. A few more employees on this one. First thing I'm going to check is the total net pay, 11,584.03. I can see that that is the same figure as compared to my original pre-update report. So this is all good news because it tells me that what was entered in the program at the time when I ran the pay slips and the pre-update reports is the same as what's been recorded when I update the records. Now, if you find that the total net pay doesn't match, that's when you'll need to do some investigation. So it usually means, well, first of all, you would identify what pay date or pay period there's a difference in. And then you start to drill down to look at what might cause that difference. So you could tick off each employee to work out which employee maybe has different totals or if there's an employee missing from the report. And once you've found out what is causing the discrepancy, you then need to establish what was actually paid to that employee and what should have been paid. Now, if it's the information on the payment summary history is what should have been paid, you wouldn't need to do a correction in payroll, but you might need to correct what you've paid to your employee. Or if you find it's the pre-update report that was correct and the post-update report is showing something different, that is when you would need to look at kind of rolling back, making a correction, and then reprocessing and doing an FPS adjustment. So hopefully you get the idea there on how to do a bit of kind of simple reconciliation. Now, the other thing this payment summary history ties back to are some of the totals on the P32 report. So looking on the last page of the report, I can see my total PAYE is 238,140. And if I look at my P32, I'm getting exactly the same amount. So I can then see a breakdown of that PAYE by a pay date and employee. And you could do something similar for the national insurance. So you would add together these two figures and that should match your gross national insurance. Now, I just want to show you one kind of bonus report when it comes to reconciling the P32. So we do have a P32 reconciliation report. Sounds perfect for the job. I've added it to my favorites, but again, this is in the period end folder. So payment summary reconciliation. When you run this one, it's going to ask you for the tax months. So I might want to just check month 4 in this example. And that will give you specifically kind of the items that are on the P32. So the deductions, income tax, student and postgraduate loan, national insurance, and then a breakdown by the different statutory payment types. So these total figures here, again, will match up with the P32. The only thing that this one doesn't include is the employment allowance. So if you've got employment allowance in that period, you would need to manually deduct that from the total amount due when you're doing your reconciliation. So as I say, that is kind of an optional step. Not much reconciliation is done at the end of the year these days. It's all done in real time, and you can find further guidance on the link in your handout. Okay, so moving on to the last section of the webinar. We've already seen it on some of the reports, but I'd like to talk in a bit more detail about employment allowance. Now, employment allowance is a government scheme that allows eligible employers to reduce their employer NI contributions by up to £10,500 each tax year. So that is an increase from last tax year where employment allowance was £5,000. Most employers are eligible to claim this these days, and there have been some changes to the eligibility for 2025 to 26. And in general, you can claim it if you're a business or public body and you do less than half your work in the public sector. You can also claim if you're a charity or employ a care and support worker. And in order to do this, you must apply for employment allowance each tax year that you're eligible. And you do that by submitting an EPS for your employment allowance claim. And I'm going to show you how to do that in the demonstration. Now, I say that most employers can claim it, but exclusions do apply. So just to outline the main exclusions, public bodies or businesses doing more than half their work in the public sector are excluded from claiming this allowance. And the other main exclusion are what we call single director companies. So that is a company with one director who's the only employee liable for employer NICs. So those businesses are also excluded from claiming employment allowance. Now, some good news. Since April 2025, employers that are paying more than £100,000 in Class 1 national insurance liabilities are now eligible to apply for employment allowance, whereas previously, 2024 to 25, you could not claim employment allowance if your total Class 1 employer's NI was above that £100,000 threshold. So that has been removed, which opens up the employment allowance to a lot more employers. Now, other exclusions apply in relation to groups of companies or where you have more than one payroll or PAYE reference. So in these scenarios, if you are connected companies, only one company within that group is allowed to claim the allowance. So you would choose a company that's most likely to use the full £10,500. And if you do have more than one PAYE reference, only one of your payrolls can claim. So we'll take a look at setting that up and then how you would claim the employment allowance. So let's just return to the demo. And I'm going to switch to a different company where I don't have employment allowance set up currently. And we'll then take a look at the steps involved. So first of all, you would go to your company tasks. You would then go into your settings. And on the details tab, if you're not currently claiming it, you should see this button at the bottom where you can apply for EA. Now, this is how you send the EPS for employment allowance. It's not done through the e-submissions tasks. That's just for reclaiming statutory payments, etc. But the employment allowance claim is done once a year. That covers you for the rest of the year, and you do it here from the company settings. So you would click on to apply for EA. You would then need to choose whether state aid rules apply to your claim. And since April 2025, state aid rules are no longer applicable. So any claim for this tax year onwards, you'd select not applicable from this drop down. And then you would go ahead and submit the EPS. That's going to take us into an EPS submission screen. And as you go through this one, it looks slightly different to the EPS where you're claiming statutory pay, as it will show yes in the employment allowance section, and essentially everything else in the EPS is not applicable. Now, usually you would do this at the start of a year. That's the best time to do it because that way you can claim it from month one. And when you go ahead and submit it, that then is sent to HMRC. Now, you're not going to get a confirmation message to tell you that you're eligible to claim it. But if they assess your claim and for some reason determine you are not eligible to claim, HMRC will send you a message to your secure mailbox, which you can access either in your program or from your HMRC portal. Now, the submission has been successful, so that's been sent to HMRC. And because we know we meet the criteria to be eligible, just need to tick this box to say we're eligible for employment allowance. And then you just see this confirmation message. So you won't get a confirmation letter. For rejected claims, check your HMRC mailbox. A reminder on the rules for connected companies. And important information, if you're unsure if you're eligible, always best to speak to HMRC directly. So that is now ticked. I can then click OK. And it means now when I run my P32 report, it is going to calculate the employment allowance that I can reclaim. Now, quick note, if you do apply in the middle of the tax year, Payroll will actually recalculate the employment allowance in previous tax months. And obviously, you'll have already paid the amount payable to HMRC for those months. So it'll be up to you to manually carry forward the employment allowance that you're eligible to claim for the rest of the year until you've reached that £10,500 limit. So a quick look at that P32 again, just to remind you where it was. So I'm going to run it from my payroll tasks. I'll do it for tax month 1, because that's when it starts to be recorded in your program. And what you can see here, if I just zoom in, is that we do have employment allowance that could have been claimed. And then the employer NI to pay in that period should have been 0. And that has reduced the total amount due. So that's how you get the money back. It's well worth checking if you're eligible, because that's gone up. And obviously it's open to more employers. So more information can be found on the link there, but the amount is reclaimed on your P32. So you're checking boxes 5 and 22 for details of what you can claim and any employer NI that might be remaining to pay. And you can keep track of what's been claimed in the tax year so far in your HMRC payments within company settings. So obviously that will keep you up to date with what you've claimed, and it will stop claiming once £10,500 has been claimed for the year. Now, if this is the first you're hearing about employment allowance, there's a chance that you may have been eligible for it in a previous tax year, but didn't get round to claim it. And the good news is you are able to claim employment allowance retrospectively for up to 4 years before the current tax year. So this means that you could claim up to £5,000 for each tax year between April 22 and 2025. And the allowance was £4,000 in tax year 2021 to 22. Now, for those earlier tax years, there was a limit, a threshold of employers' NI that you needed to be under in order to be eligible. So your employers' NI in total must have been £100,000 or less than £100,000. But if you think that you were eligible for previous years and didn't claim it, I've linked to some guidance on gov.uk. And to submit that claim, you'll be able to do that directly through Payroll. So just to give you one final demo, it's going to show you how to send an employment allowance claim for a previous tax year. So let's just jump back to the program. All you would need to do is, first of all, set your process date back into the previous year. So in my case, I'm going to retrospectively claim for 24-25. I can set my date to the 5th of April, 2025. And you can then go into company and settings. And if you didn't apply for it at the time, you should see this option to apply for EA. So you need to choose whether state aid rules apply to your claim. And then you can send the EPS. And you'll see that it's being sent for the previous tax year. So that's how you can notify HMRC that you were eligible. Obviously, you'll have made all of your payments for that previous tax year. So if you contact HMRC, they can arrange with how you would get that money. So it might be a refund, or it could be offset against other liabilities you may have with them. So again, something well worth looking into if this is the first time you've heard of employment allowance. So that's actually brought us to the end of the demos for today's month-end webinar. We are going to stick around for a few more minutes. We'll keep the webinar open at the end as well to let you read through some of the Q&A. Just to let you know, you can't download the Q&A transcript. So if you see questions and answers that you'd like to keep hold of, please do copy and paste them into another document. But to let you know about some of the further support that's coming up, we have a month of quick learns in August. So we've put together 30-minute webinars focused on some handy features in Sage 50 Payroll, including the HMRC Secure Mailbox, Payroll Assistant, factored payments, timesheet entry, and report selections. So if you're interested in learning more about any of those topics in our half-hour sessions, you can get yourself signed up at sage.co.uk/webinars. You'll also find recordings of our previous webinars from that same website. Further help can be found on our Help Centre, so you can click the help icons in Sage 50 Payroll, or in a browser, visit sage.co.uk/help. And if you're looking for contact details for our support team, try the Help Centre first, choose the topic you need help with, and then look for the Get in Touch options. And you can reach out via web chat, telephone, or whichever way is easiest for you. You also have access to Sage University at sageu.com. That's where you'll find our e-learning, our online certification and bite-sized learning courses. So do check that out if you haven't already. So like I say, we'll keep the webinar open just to give you that chance to look through the questions. We will stop answering the questions at the scheduled end time. So any final questions that you may have, get them submitted now. And do remember to download a copy of the handout if you would like that before you leave. We will send you a follow-up email, which will contain a link to the recording of today's session. So look out for that arriving in about an hour's time. And we'd love to see you at some of our future webinars. You can sign up at sage.co.uk/webinars. So I'm going to say goodbye at this point for those of you that are leaving now. But if you want to have a look through the Q&A, we'll keep the webinar open for the next 5 minutes or so. Enjoy the rest of your week, and hopefully we'll see you again on some of our other webinars in the future. But it is goodbye for now.